Good morning, FAnews readers, and good morning, Lisa, Muchabi, and Henk. Thank you for joining me this morning. I'd like to start by reading a quick statement. COVID-19 hard-hitting economic impact is bound to place an insurmountable number of jobs and livelihood at risk. Individuals may fall ill during this time, be made redundant by the employer, or fall victim to their business having to close down. All of these options pose a threat to an individual's prospect of unemployment. These are the very hurdles which income protection insurance is designed to overcome and provide for. I'm speaking today to Henk Meintjes, Chief Specialist Risk Propositions at Liberty Group, Lisa Wells, Chief Product Actuary at FMI, and Muchabi Nomvete, Head of Technical Marketing at PPS, about the conversations advisors need to have with their clients. And today's conversation is obviously of particular relevance to advisors dealing with income protection. Thank you for your time this morning. So I think we figured out no work, no pay during lockdown doesn't mean you can claim from your income protection policy. But I'm sure you have had some queries directly from clients or questions around this. Lisa, from your side, did you have anything?
Yeah, look, I mean, the effects of sort of the ability to earn income during this time has really been devastating, sort of not only in South Africa, but globally. I guess at FMI, we've been able to pay 100% of valid claims for COVID-19, where someone has got the, the appropriate benefits that would cover that diagnosis. But unfortunately, income protection is designed to cover something where there's an illness and an accident that happens to you personally. So a situation of lockdown where you have a loss of income due to the business interruption, that is not covered as a claim under income protection. And it is really a totally different set of risks that hasn't necessarily been priced into it. And I guess as insurers, as much as we trying to take as much of an empathetic approach, we're not simply able to cover, to pay claims for just purely lockdown interruption, because we have this obligation to our existing policyholders for their future valid claims around things like cancers and future disabilities. And I guess that's where we're hopeful that some of the government relief or bank programs might be able to assist small business, particularly small businesses and self-employed people.
Muchabi, have you had any queries around this?
Well, we've had similar queries to what Lisa has spoken to. I think what is important to highlight, though, is that where PPS is slightly different is that though we fall under the income protection sphere, we do specifically offer sickness benefits. So our benefit is specifically called sickness benefits, and that by definition does require for there to be some sort of sickness or disability or injury. So I think all of us are in the same pot with regards to that. Where we have also found a lot of queries from our side is because of us covering a lot of medical professionals, especially. And they obviously are the people in the front lines who are trying to fight this disease. Their biggest concern is what happens if the business has to close down because they have been exposed to a COVID-19 patient, for example, and they now need to self-isolate or to go into quarantine. So that we have now made provision for, that if there has been exposure to our medical professionals because of a confirmed COVID-19 case, that we would consider as a valid claim, because it obviously does affect, it is a risk. We wouldn't want them to see other patients if they have been exposed, and we accept that they need to then go into quarantine until they are safe and healthy enough to go back to see more clients and to help to fight the disease.
Okay, that's quite interesting. I haven't thought about that. So well done for PPS for making provision for that. Henk, on your side, any interesting things that you've seen?
I think on our side, the product design is quite similar to what we're seeing from FMI and from PPS, being that it is based on the policyholder or the life assured's ability to really perform their occupational duties, and specifically relating that to an injury or a health event that's prevented it. So the lockdown in itself is preventing us from working, but it's not at a personal level, and it's not an insured event that was ever priced or intended within the construct of these products. We do, however, also offer solutions like retrenchment protection to our policyholders. And where formal retrenchment has occurred, those are also valid claims where that benefit has been bought. And so we are seeing quite a few requests around that as well at this time.
Sure, that's quite early already to see that, and I suppose that there will be quite a few more coming your side. So the obvious next question, which have come very early on, was the whole premium holiday. But from FMI side, I saw terminologies like grace period, reinstatement, freeze benefit, and sabbatical. So can all of you just tell us what you've done for policyholders in terms of this, be it a grace period, reinstatement, freeze benefit, sabbatical, payment holiday? What are you doing at FMI, Lisa?
Sure. So our products, I guess, have always had sort of flexible options within them because future insurability has always been quite important to us. So we've sort of, the only change we've really made is brought some of that optionality, being able to exercise that a little bit earlier. You know, a grace period is really where you've got 60 days to be able to pay your premiums. You're still on cover, and if you claim in that period of time, if you make due the premiums, your claim will be paid. A sabbatical option is where somebody is taking a sort of a break from work but doesn't want to lose their cover, and they're not occupationally employed. But you know, with some restrictions, we can keep that cover in force, and the premium would reduce a bit because of some of those restrictions, such as a longer waiting period. So that helps a little bit with affordability if people want to utilize that. Reinstatement options allow you, if affordability is a problem at this stage, you could reduce the level of cover that you've got and then be able to reinstate that back at the next policy anniversary without any medical underwriting, so the ability to access that cover again. And then I guess freeze is if you really cannot afford to keep that policy going, you know, putting the cover on hold and the premiums on hold for 3 months or 6 months. I guess we're seeing a lot of requests around freezing policies, and where we've had those requests, we've been able to accept 95% of those requests. I guess we would like to encourage, you know, advisors and policyholders to consider retaining some level of cover, because under that circumstance, you're not necessarily going to be able to claim if you do have a COVID-19 or another illness or injury during that time. Yeah.
But even if you freeze your you're still covered in all of those cases. You remain covered.
No, so the cover would reduce. So if you choose to freeze your policy under FMI, unfortunately, we we applaud the insurers that have been able to sort of give a premium holiday as such. As a risk-only provider, we're not in the position to be able to sort of fund some of the premiums and retain you on cover. So if you do choose to freeze, you wouldn't have cover during that period, which is why I guess we would encourage people to look at reinstatement. You know, drop your cover to maybe a lower level of cover, or look at ways where hopefully advisors can sort of advise policyholders on the most suitable solution to maybe take a cheaper option, or you know, then reinstate cover back once you are able to earn your full income again.
Okay, thank you for clarifying that. Mochabi.
Okay, from our side, we've also had a few options that have always been available. So we haven't really done too much in that we have always had premium relief options available for our members. We've just expanded on a few of them. We do have 3 options. So similarly, we also have a 60-day clause where if members do miss their premium, so when I refer to members, it's our policyholders because we call them members. But if our policyholders do miss their premiums for up to 60 days, they are still covered. And one of the questions that we've actually asked, or that we've received a lot from our members, is do they need to inform us in advance that they will not be able to pay their premiums? And interestingly enough is that they came back with, they don't want to obviously have a bad credit record at the bank. They don't want the debit order to come back and bounce. So I found that to be quite, that they're actually still thinking about obviously what are the effects if that were to happen. So we said, yeah, if you do advise us, then we will not even draw or attempt to draw the premium. So that was quite encouraging that they are thinking more longer term and the potential effect that it could have on their overall credit rating. But that being said, we do have that 60-day option where if they don't pay a premium, something happens in that 60 days, they would still be eligible for the claim. The premiums then would be taken back from the claim amount itself. So that's the first option that we have, which has always been there. The second option is what we call where they do stop working. So similar to FMI, where if members do stop working, either because they're taking sabbatical, they're going to further their studies, they're going on a long holiday, but normally those are normally the reasons beforehand. Obviously, that's not for completely very different reasons. We call that the temporary cessation of premium payments. That's the official word for it. And all that means is for up to a period of 12 months, members can stop paying their premiums. Where we have made an enhancement on that is that that was also available on all our other products, excluding death benefits, simply because you cannot predict when death will happen. And the rationale was that we would want you, or we would imagine that even when you are holidaying, studying, or whatever, you would still want to look after your family financially, if you were to pass away. So previously on the death benefit, that option was not available. We have now introduced this as an option, but only for the first 3 months. So meaning that we're giving them relief in the first 3 months to have a complete premium holiday or not to pay any premiums at all. An addition that we've made to that is that on the death benefit itself, also for the first 3 months, again, if the member were to pass away in that 3 months, then there would still be a valid claim. So they're not paying a premium. So they at least get a little bit of a relief just to try get their finances back in order again, or just to try figure out all that's going on. And then after the 3 months, their options would be then to still stop paying premiums on, for example, the income, the sickness benefits or the critical illness benefits. But then for life cover or death benefits, they would need to resume, because the risk there is quite high. Yeah. Then they would need to resume premiums. For the other benefit types, they have up to a period of 12 months not to pay premiums. And again, obviously the benefit of that would be reinstatement of cover after 12 months or even before 12 months. So when their financial situation improves, at any stage they can come back and say, I'm good to go now. I will now start resuming my premiums from the very next month. So that's one of the second option. And then the last one that we had, which was, again, also has been available in PPS for the last 2-3 years, is but this one is really where members are in complete and absolute dire straits, is because we have the PPS profit share account, which is money that accumulates to our members and they're able to have access to it from age 60, because we use it more as a retirement planning tool to fund their life or to supplement retirement savings. We are allowing members to access that and to use that to pay for their premiums, even if they're younger than 60. So that's an option. Like I said, all these 3 options have always been available. It obviously just is a question of we trying to be flexible, we're trying to be understanding. Having said that, especially with the profit share one, that when the rules they are a bit more stringent, we would need to go through a means test, because we also don't want everybody to just access this unnecessarily. All of this does require financial planning, financial consideration, and proper judgment. I think at the time like this, especially in the insurance industry, it's known that's normally the first purchase that's, I'd rather keep my subscription for cable TV and everything else, but forget about the most important thing. So there is that option available as well. But then again, like I said, we advise them to go through the financial planning after financial advisor. And if really, like we say, if practices have it to close, we have to be understanding of that. That option is available if they do have the funds in their profit share account.
Well, that's great. It seems like income protection in general is a fairly flexible, you guys are fairly flexible and innovative in the areas that you operate in. Henk, from your side, what has Liberty done?
Yes, so from our side, again, there's options that have really been available to clients ahead of COVID-19. And it's really just, I suppose, coming to the fore in a more significant way now, with a lot more queries around it. From our side, though, it is important to stress just the holistic advice which needs to be taken in context of any of these. And important for the client to understand the terms on which their cover will be reinstated. Often the solutions in the market are around, not necessarily having to go for full medical underwriting again, but it's not clear exactly what the terms will be. So will your premium be based on a new age at entry or so forth? So I think it's just very important that clients take holistic advice. At Liberty, we do provide a premium flex facility to our policyholders, which allows you to reduce your premium right down to our minimum premiums, but that is accompanied with a reduction in your sum assured during that time. Should you be able to reinstate within the next 6 months, we will push your cover right back up to the original sums assured as if the reduction had never taken place. So that flexibility is there. But we have also always made available to our clients other solutions, some of which include a benefit called your financial protector, which is like a savings pocket on the side of your risk policy, which you contribute to, and in times of financial difficulty, whether that be unforeseen or potentially a planned sabbatical that you always wanted to do, you can use that money to pay towards your risk premiums. And of course, if you've got retirement annuities and other investment type solutions at Liberty, we can look at helping you to reduce your premiums on even those products over this time.
Okay, no, that sounds very good, and the flexibility I really appreciate. So obviously this lockdown and all the stresses that comes with this whole time we are living in comes with a lot of stress for a lot of people, be it that the extrovert people can't cope with not seeing others, or obviously the fact that you don't know what your income will be and if you will have a job. So I do see a rise in mental health issues going forward. Do you agree with me? Do you see that there might be an influx or an increase in mental health related type claims in your environment? Maybe we can start with you, Henk.
I think the risk has to be acknowledged. The consequences of corona, number one, on a medical sphere, hasn't been confirmed yet. We don't know all the consequences that it will have on people who are unfortunately infected. But likewise, the implications of a lockdown on our extroverted psyche as well as our economic situation will impact all of us in one way or another. The loss potentially of a loved one through this time will also have an impact. So I think we are all going to be under increased strain emotionally, and so we have to all just look after ourselves and try and not become a socially distant but potentially only physically distant society. So to stay in touch with family and loved ones, use technology, and look after yourself and the people you care about most.
That's very true. But do you think that there will be an increase in mental health related claims, specifically on the income protection side, where people have been really affected?
Yes, so definitely there's we are expecting that, but as I say, the extent of that is not yet known.
Motshabi, on your side?
Yes, I have to agree with Henk that we do expect, like I said, especially with us where we do provide mostly for healthcare professionals. They are in the front line. It is scary. I mean, I remember earlier this month when I myself was sick, and I had to think 100 times before I actually convinced myself to go to a doctor. And I was sick as a dog. And my biggest thing there was, as sick as I am at home in a closed environment, now I need to go and expose myself at a whole healthcare facility, and I don't know what is out there. So it took 2 days of convincing before I actually got myself to the doctor, kicking and screaming, trust me, with all the protective gear and everything in place. And I thought, if I'm just this one person who feels that way, what about the people who are faced with this every time? Every time they meet a patient, they don't know what they're being exposed to. So we definitely expect that this is creating fear. It's definitely going to create stress, burnout. I mean, I'm sure part of the reasons we brought in the doctors from Cuba is because we need extra hands on board, which then already for me suggests that our current doctors are under strain. They're working long hours. So psychologically, it will have some sort of an impact on them. And besides the healthcare workers, like you said, for the rest of us, it's being constrained, it's being in lockdown, it's being confined to a small space. And for parents, the dynamics are becoming even more interesting. If you have kids in school, some are lucky enough to have sort of been able to school from home, if you can call it that. But that means in between trying to work from home, meeting your deliverables at work, you need to take care of their kids, make sure that they're getting their schoolwork done. It means connectivity, it means homework, assignments, projects. That hasn't stopped. For most people, a simple thing like now you have to do your own laundry. If you do have a domestic or a helper, if they're not live in, they're still not able to come back. There's also the added dynamics of doing laundry, of cooking extra meals. Everything has changed And 6 weeks is a short time to have to deal with all of this happening all at once. So we do expect a level of extra stress, extra strain, which will start reflecting in our claims experience.
Lisa?
Yeah, no, look, I agree with the sentiments. I think it's been a trend, mental health has been a trend in that we've noticed before COVID-19. I mean, what we've done during this lockdown period is made available counseling services and sort of access to a psychological sort of network through our partners, Global Choices and Talking Point. So hopefully that provides some help. But I think the psychological, if you look at the triggers to psychological and mental health claims, a lot of it is financial stress, in addition to obviously other underlying symptoms or diagnoses. But I think the poor economic outlook over the next short while is going to have a bigger impact on sort of, and the spike on mental health claims. So I think while we at FMI have quite a lot of our claims are short-term in nature, illness, injury type of claims. Psychological claims make up a relatively small proportion now, but I do expect there to be an increase. And I think where we will probably see more of an impact is actually not necessarily on psychological claims, but policyholders or claimants' well-being, impacting their ability, their mental well-being and ability to be able to rehabilitate people back to work. So we might see claims potentially lasting longer. And I think that's where it's really important to have a really strong claims team. I guess at FMI we're lucky to have sort of disability income specialists to be able to help us manage those claims. But they are the trickiest claims and the most challenging to sort of deal with, and the most costly, I think, in the long run.
For sure. Out of interest, how was the take-up of that call center facility where people could phone in? Did you definitely see an increase in people phoning?
Yeah, I mean, I don't have the sort of numbers or checked in sort of on top of my head, but I think it has been appreciated from advisors and policyholders, sort of access to sort of those counselling services.
So the rumors are that this won't be our last pandemic. Do you foresee, I know it will come at a massive premium, but do you foresee some form of innovation on the income protection side in terms of times like this, or am I really off the line? Motshabi?
That's quite a difficult one to answer. I think for me, where I see the biggest opportunities immediately is definitely consumer education. I think us as an industry, so that's insurers, advisors, everybody has to play a bigger and better role in educating our consumers. I think it is quite disappointing where people have one expectation and yet what they've bought is something completely different. So that's where I see the quickest and biggest win for us. That we really need, us as an industry, really need to go out there, spend this time educating, going back to the basics as well. I think so often, like I say, in this whirlwind that we experience at the moment, you forget the very basics. What is the purpose of insurance? And then understand. Well, my one hope is that insurance will no longer be a grudge purchase. I think if the day we can win that one, I will say we've won the battle. Within that, obviously, then there will be opportunities for innovation. There will be opportunities for product innovation, process innovation. I mean, for example, one of the other things that we have done is, which I discovered after my visit to the doctor, was that you can actually consult with the doctor now via video. And I think that's going to become it's going to happen more and more. And I mean, I felt if I'd known that before, I would have definitely taken advantage of that, one for my own fears. Two, I would rather free up the doctor to see the really, I need to see a doctor type of person. And that in itself has had an effect on how we do assess claims, in that we will accept claims where a member has consulted with a doctor telephonically or via video. Obviously, where possible. I cannot possibly put in a claim for appendix that I've had. I couldn't have had an appendix removed, but I haven't physically seen a doctor. It's obviously within reason, but that's almost forced an innovation just like that for us. Obviously, digital means that's definitely going to come to the fore. I think insurtech has always been there somewhere. Some of it has been met with resistance. Some of them have worked a bit successfully, but are still a very small pool of that. So there's going to be huge opportunities there, because it will take time for people to feel comfortable, to feel confident, to have face-to-face meetings like we used to. So there's definitely huge opportunities there for growth and for us to try different things.
Lisa, from your side?
Yeah, I think to answer your question around whether income protection might cover future pandemics, I think you really, yeah, it's a very difficult question to answer. I think you've really got to weigh up the cost of insurance. So, you know, for us to, as I mentioned before, to be able to pay all sort of situations of a business interruption lockdown, the cost of insurance would potentially, you know, be too high, and then it wouldn't sort of be purchased. But where I think we're already seeing a lot of, where I think there might potentially be innovation for income protection specifically, is really around the way people work. We're already seeing that the, you know, the way we work is changing over time, and particularly with the millennial sort of younger people around, a lot more freelancing, a lot more side hustles, dual occupations, that sort of thing. And so we've always been interested in trying to provide cover to more people rather than simply sort of the salaried and professional working people. And I think with the pandemic that's hit now, there are going to be a lot of retrenchments, poor economic climate. There is going to be more flexible working scenarios, and where we can look to try and, you know, look at our sort of definitions. We've already got sort of some definitions that allow us to be able to give alternative working situations cover without it being sort of an occupational assessment. And I think that's potentially where we would probably see some innovation, in addition to, I guess, the digital sort of rollout of, I think companies will potentially be rolling out digital solutions faster than maybe originally planned.
That's why I love our industry, because we really react fast and we keep up with the times. It's fantastic to hear. Henk, on your side, innovation?
Yeah, I think the innovation will follow the societal change. So I think the resilience of society against something like a lockdown is going to be better into the future. We're all, look at us doing a Zoom meeting here today. You know, that's not something that we used to do. Personally, my work environment's become completely digital, and we've embraced it, and you know, the productivity is there. So I think first and foremost, we're going to have to see how does society change, and the insurance products that we develop have to be fit for purpose for that need. So I think, as Lisa pointed out, we'll have to look at new claim definitions and things like that associated with income protection. We need to look at people having multiple occupations and working flexi time. It's no longer a case of one job and you know, complete reliance on that one job and complete inability to work in just that one job. So I think there will be innovation around pandemics specifically. I think we shouldn't brush the products that we have today off and say that they don't cover pandemics. That's not true. If you are infected with COVID-19, you will most likely have a valid income protection claim, depending on the symptoms that you have, right? So we need to look at that. Where we aren't, as insurers, currently covering is the impact of a lockdown, the impact of not being able to leave your home. And these are things which are almost impossible to price. But that said, I think, you know, certainly government's going to be thinking about how does it prepare itself into the future for such scenarios. We've seen, you know, government putting a lot of money aside to help the economy recover, but a lot of that money is actually just there to replace those lost incomes, to put food on table for families. And so I think there is opportunity for actuaries and insurance companies to engage with government post this and to find sustainable ways if we believe that these risks will become more frequent.
We have about 30 minutes left. I just want to ask you if you can give a quick word to our audience, who's the advisors or the guys that hopefully helps your machine run. A word of encouragement, a word of advice, a word of any word. Lisa, from your side.
Yeah, look, I think advisors for us are really sort of, you know, so important to us, particularly with the consumer education piece. I think advisors, particularly now, going through a really tough time, and I think you know, now more so, I guess my word of advice would be those that can try to create some sort of a stable income with monthly sort of fees, you know, ahead of sort of the commission regulations or RDR coming through, are probably going to stand a better, you know, test of time going forward. But we really do empathize with the industry and particularly financial advisors at the moment.
Motshabi?
For us, the one message to our advisors is stay close to your customers, especially now. I think you are the specialist in terms of financial planning, and they really do rely on you. So stay close to them, especially during the tough times, because they will remember you. The second thing I would like to share with them is embrace technology. We have some advisors who have worked in certain ways for the longest time, and it's worked for them. And then up until now, there was nothing wrong with it. Obviously, times have changed, so probably use this time to upskill themselves, embrace technology, find clever new ways of putting yourself out there, being there for your customers. I think that's the most important thing. And it is tough, we acknowledge that, but this too shall pass. That much we also know.
Thank you, Motshabi. Henk?
Yeah, I think, you know, it's first and foremost just to recognize that they are themselves also on the front line. So I think, you know, medical practitioners have to be there in physical person in many instances, and not to take anything away from them. But for many of our clients, you know, their financial future is equal to their physical health, and phoning and querying, you know, getting support from their advisors has definitely been the case. You know, even for myself, an actuary, I've had to engage with my financial advisor this week, my wife as well. So, you know, there's a definite need, and we just have to take our hats off to the guys and women out there who really are supporting their clients through this time and being pillars in society. But also just, you know, look after yourselves, make sure that you're not taking risks unnecessarily, look after your family, because just like the medical practitioners, you know, if you fall ill, if you're not there for your clients, you know, that's also not great. So just a big thank you and kudos to all of you for what you're doing.
Yeah, no, I thank you, Henk. I really like that comparison. I think it's quite a tough time for them, dealing with their clients and handling them very differently over the phone versus that physical face-to-face meeting. But our time is nearly up, and from my side, I would just like to thank you for your time this morning. I really enjoyed the conversation. Lisa, Motshabi, and Henk, thank you very much for your time, and follow us on Instagram, LinkedIn, everywhere. Thank you very much. Thank you for your time.
Thank you.
Thank you. Cheers.